Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session for the Forex Trading Room on October 20th of 2019. We will be going through our standard agenda. I'll look at the week's results, our currency strength meter for the past week and month, fundamental announcements on the calendar for this week, a look at the major pairs on the daily charts, any setups we see in progress or likely moves that the market may make, and a few words in conclusion. Starting with on, we are down for the week on multiple closed trades, but on the plus side, we are carrying, in some cases, significant level of profit. The USD CAD in particular, we're carrying about 400 pips weight adjusted of profit right now. And our £2 trades that were opened on Friday on the expectations of the vote in Parliament over the weekend going against and plan are carrying some profit, not a whole lot. The market didn't move as much as could be expected, and we'll cover that a little bit later. But the pound pairs are moving into weakness right now as the week begins. So all in all, while the account is very slightly down, it's not as down as the results here show. The intern also had a few trades closed again, so we take looking good overall. We have two trades open, Kiwi dollar and Euro Swiss. Both of them, I think, were slightly negative as the week ended, and we will be looking for likely trades to take as the week begins. The short-term account did take a significant hit this week, basically one against, especially with pound pairs that took a turn midweek and gave us, well, the bulk of our losses. So we will be looking at what we can get into this week. Again, this is a normal part of trading. It's not always going to be up, and away. So we live to fight again. We never risk enough that the account gets crippled. So we always have enough to come back and recover on that. But as I said, the short term is probably the account that's taken the biggest hit so far. Notice an opportunity for absolutely challenging market conditions board, and we'll look at some of the charts and cover some of those. We had drawdowns on all accounts, but nothing major, all things being equal. We did follow our trading plan and rules, and of course, those are mainly designed not to make us profit. Unlike what would be the obvious for a trader trying to make profit, we go at it a bit of a more sensible way. We're trying to lower our losses and let the wins take care of themselves. So all our rules are designed to make sure that we don't blow up the account. So long as that doesn't happen, we will always be exposed to the bigger wins. And of course, that's what's been playing out this year. So it has been working quite well. Pound shorts opened on the long-term account as the week ended, as I mentioned, in anticipation of Parliament voting down Boris's deal. And that indeed is what happened. Saturday, that deal was defeated in Parliament, forcing Boris Johnson to submit a letter asking for an extension out of the EU to prolong or postpone Brexit for an undetermined period of time. The UK does not get to pick how long the extension will last. That is solely up to the EU. They can choose to reject the request and not give an extension, or they can choose to whatever time consider appropriate to approve it. The expectation, of course, is that they would approve it regardless, but they do have the option of saying no and forcing the UK to exit the European Union at the end of this month, as per the original revised 5-time schedule that they've been working under for the past few months. At the same time, however, it's a funny thing. Boris sent that for an extension, and he didn't sign it. Obviously, it's a official document, so you can argue it didn't need a signature. But curiously enough, he didn't actually sign the document. And he sent the second letter, this one he did sign, telling the EU that he thought it was a really, really bad idea to extend the Brexit timeline any further, and that he is still determined to exit the EU at the end of the month. So take that as you will. It's a little bit sort of split personality, but that is the situation that is on the table right now. So the vote went against Boris on Saturday. A letter asking for an extension was sent, and at the same time, a letter saying an extension would be a really bad idea was sent along with that first letter. The plan is going to be tweaked between now and Tuesday. And on Tuesday, the Parliament in the UK is going to be voting yet again on whatever deal Boris manages to put forward by then. So there is still a lot of uncertainty around what's going to happen with Brexit. The market, of course, is already opened. I expected a bigger movement. That didn't happen. I expected 200, 300 pips easy on a gap, but that didn't materialize. But most of the pound are down anywhere between 100 to 100 and a tiny amount further, 120, 130 pips, depending on which pair you look at. So we did pick up some open profit on the long-term account, but not as much as I had expected. The trades are not going to be closed. They're not going to be moved. Everything actually happened, and I hate trying to predict what's going to happen, but it was calculated, and it came out the way I expected it to, and the vote came out negative. So we will be holding on to those trades, seeing what the vote on Tuesday brings us. And again, I really don't see a whole lot of good news coming out of this whole scenario. So we will be sticking to the shorts and seeing what happens with that. That we move on to our relative strength meter for the past 30 days and the past 7 days. So looking at the monthly, we can see that the metals, silver and gold, have given up some of their gains. They're still significantly up after that bullish run we had in the last few months. But the last 30 days have definitely been bearish for silver and gold. We see that the clear winner out of the entire month has been the pound, followed by the Kiwi, followed by the Euro, followed by the Aussie. Then we have the CAD and the Swiss sort of middle of the road, and we have the losers being the yen, the dollar, basically for the past 30 days. Looking at the past week, of course, again, the pound was the clear winner. That bullish run out of the pound has lasted now 2 or 3 weeks. We have the Swiss also regaining a lot of strength, and we did take advantage of that to some degree on the short-term account. So we did have some wins there, but not enough to offset the earlier losses on the pound pairs. The Euro also had a really good showing, and we're going to take a look at that on the charts. The Aussie didn't do poorly, and the CAD, of course, did very well, especially against the dollar, where we also have an open trade on the long-term account that I mentioned is carrying about 400 pips right now in our favor. Kiwi was sort of middle of the road, and then the losers for the week were the yen, the dollar, and of course, again, the metals, silver and gold. Volatility for the month is not as high as we've seen it. We've seen it go up all the way to 10%. The last 30 days have a band of about 6% in either direction. And the week was a little bit higher than normal. Consider 1.5% to 2% normal. This was 2.67%. So we did have some decent movements. Our calendar for this week is very light, not a whole lot of events happening. We do have the European Central Bank's interest rate decision coming out Thursday morning, 7:45 a.m. I hate these early mornings because I am definitely not a morning person, but we will be trading that one live. So I'll be opening up the trading room at 7:30 a.m. Eastern on Thursday the 24th. to trade that. Nothing else on the calendar, except perhaps we may stick around for the monetary policy statement and press conference that's coming out at 8:30. By the time we're done with our fundamental trading, there'll be about a half an hour gap till the press conference starts. So we may stick around for that. I'll make that decision later on. But the rest of the calendar is pretty much stuff that I don't normally trade. The retail sales month over month out of Canada and durable good orders out of the US on Thursday as well. So nothing there that I would like to trade. So the interest rate decision and perhaps the press conference will be the bulk of our fundamental trading for the week. Oil has found a pretty strong level of support at the 50-50, where we can see it has bounced multiple times. And this last drop didn't quite get there, bounced before reaching that level of support, and is now traveling at the outer trend line. And really, in essence, it is going sideways between the 61 at the top and the 50-50 at the bottom. That is the current sideways band. Just one breakthrough out of the top that nearly made it to the next level of resistance and established a new trend line. But all in all, oil is trading between 61 and 50-50 very consistently since, I'm going to say, back in May of this year. Of course, we've had a lot of political and even terrorist-related activity that has impacted oil at the bottom of the range, but it's not going any lower. So we're not seeing it go anywhere near the lows of the 40s that it did towards the end of last year. So that is a good thing. There is some support there. And if it goes up, well, hopefully at some point it'll benefit the Canadian even more than it has. And I should add that Canada has elections tomorrow, so that may also add a little bit of volatility to the market. The Canadians are pretty calm people when it comes to their elections. So regardless of who wins, Trudeau or his conservative challenger, I don't think there will be much impact on the CAD. Of course, I could be wrong, but I'll stick to that for now. Anyway, that USD CAD trade we have open, I may take a look at it and see if I want to protect some of that profit, but I'm more inclined to let it run because I am looking for a bigger win than what we. Moving on to our currencies, of course, the euro, as I mentioned, had a pretty good, and the dollar had a dismal one. So that affected this pair, which went almost, but not quite, to the resistance at the 111.80. It fell just shy of that. We'll have to see how the week opens. The euro has been gaining strength, and I'll make mention of this later on in the presentation. I really don't understand why the euro is gaining strength. I understand why the dollar is losing it. I've been expecting the dollar to lose strength for more than a year now, but why the euro is gaining strength right now is a little bit beyond me. There's really nothing good coming out of the Eurozone right now. Fears of recession, manufacturing woes out of Germany, banking crisis, right-wing candidates being elected, a threat of the EU itself collapsing as more countries try to exit. There's nothing good. Yet the euro gained strength. Well, so be it. The market is always right. We can only follow along. But I'm very skeptical of the euro continuing to gain strength against pretty much any currency. Whether the dollar continues weakening or not is a completely separate story. But the euro, I think, will return to weakness at some point in the near future. So we have to be on the lookout for that. The pound, of course, for the last couple of weeks as hopes of a Brexit deal and less chaos dominated the market. Those hopes have been dashed. So if you look at the chart right now on the pound dollar, I'm not going to show it, but if you go to your MetaTrader or whatever you're using for your charts, you will see that it's already dropping, and it has dropped quite a bit. Again, since the market opened. It gapped on the open for one, and then it's been continuing to go down, but far slower than I would have thought. So take that with a grain of salt. Obviously, the further deliberations and voting that are going to be happening this week will have a significant effect in either direction. So be careful with it. But my bet is now back on the pound falling against pretty much everybody else. USD/JPY continues to be a little bit ambivalent. It has tried to go up into yen weakness, and this is another one which I'll make mention of later, just to remind people. But this is another one where I don't understand why it's going in the direction it's going. So I told you that the dollar weakened significantly in the last week. You can tell by this chart. It still looks very bullish. It looks like dollar strength, yen weakness, except the last, from the middle of the week, last week, it started heading down again, but not significantly. It didn't drop a whole lot. Even though the dollar was weakening, the yen seemed to be weakening pretty much at the same pace. So we had that drop the final 3 days of the week, but nothing major. And indeed, I don't know. I would expect, this is another one where I would expect the yen very soon to regain some strength, giving us fantastic opportunities across multiple pairs. But of course, we have to wait for that move to actually happen. For now, this one is still above support and following a uptrend, a retracement uptrend, and we'll have to see how long that lasts. USD CAD, you can see just comparing the two charts, how different they are. USD CAD has been going in the opposite direction. CAD strength and dollar weakness is down all the way to a very significant level of support at the 130, 130, and indeed continue heading down. So it did break that support. It ended the week right at that middle trend line, descending trend line. And of course, we are pretty much trading it in that direction. We expect it to drop further. Elections tomorrow in Canada, keep that in mind, but also dollar weakness seems to have come into the market. So very hopeful that this one will continue heading down. Of course, we don't trade on hope, so I've already started protecting some of the profit on that trade via trailing stop, but we'll see how far it can drop before it ends. This more than Swiss strength. It did go all the way down into the Ichimoku cloud. This was another one of our big winners on the short-term account. Again, didn't offset the losses from the account trade. Did do a nice bit of recovery. Otherwise, that account would be looking very dismal right now. So we took profit on the USD Swiss as well. Obviously, short-term account, so I did exit at the end of the week on Friday. But we'll see if we want to continue going into the USD Swiss in the same direction, or indeed shorting the dollar across the board. The only one where the dollar isn't massively going down is the USD. Everything else seems to be looking like dollar weakness across the board. Aussie dollar, same thing, dollar weakness, moving the Aussie dollar all the way to the top of the Ichimoku cloud and almost but not quite hitting that next level of resistance. And you have to remember, these levels of support resistance are not set in stone. There is a bit of wiggle room there of, 50 pips even on either side. So you draw the lines as best you can using the candles to guide where you're going to place the lines of support resistance, but they're not meant to be aligned. They're more of a little bit of a gray zone there. So it did hit resistance, seems to stop there at the end of the week. And of course, we'll have to see now that the week is opening whether we're going to continue seeing dollar weakness for another extended period, maybe even a trip to resistance at 70.50, giving us about a 200 pip opportunity. So we'll be on the lookout for that. I'm not too convinced that it is going to move in that direction, but I will trade whatever the market gives me. Kiwi dollar, same thing. The week up, the week on dollar weakness, not quite a big a movement as the Aussie dollar, at least not against the Ichimoku cloud. This one ended up at the very bottom of the cloud and also at another level of resistance, now support, since it did cross it at the 63.75. So yet another one that we want to keep an eye on. We do have an open trade on the Kiwi dollar trading it down, so we are carrying a loss right now, but I'm going to continue to let that run on the intermediate term account and see what it does. Again, I'm not convinced that dollar weakness is going to continue being the flavor of the week, but we'll see now that the week is very sideways, moved up this week, almost, but not quite to the bottom of the cloud. Far away still from that outer trend line. And again, moving sideways, we may end up trading this on channel bounces if it does continue exhibiting that behavior. But for now, I'm pretty much waiting for it to finish going up. Again, the CAD is getting stronger, but you can't tell from this chart. So would expect it to turn around at any moment and try to head back towards the bottom of that channel to that level of support at 69, basically 68.9, whatever. I'm sorry, 89. It's currently that level of support at 88.937, rounded up to 89. That's where I would expect there to be a target, which is only giving us about 100 pips worth of a potential profit on the turnaround. Euros, we also have an open order going short on the intermediate, and we took that trade when the market turned on Thursday. And it's not carrying profit, but it's not a loser either. It essentially was at break even when the week ended, I think carrying a very small negative. So we're also letting that one evolve on its own. It did hit the top of that side channel, turned around, and we are looking to trade it back towards the bottom. Again, I expect there to be euro weakness coming back at some point to the market. Doesn't have to be today or this week even, but I am willing to hold that trade and let it evolve into what I consider its natural direction down. Euro pound, pound here. So obviously the pound has done very well in the past 2 weeks, and we can see that there. It broke the trend line, broke support, kept going, and got about a third of the way down to the next level of support, all the way at the bottom at the 84.90, with the uncertainty that the negative vote in Parliament this week added. This becomes a pretty good pair to trade up, especially, and again, I'm not convinced of it, but especially if we continue to see euro strength, then that combined with poundness that the situation has engendered will probably make this one revisit some of the higher levels of resistance, 87.85, 88.70, 89.75, maybe even all the way to the mid-90s at the top of the Ichimoku cloud. This would not be a surprising move if we do see some more negative news come out of the UK. Euro JPY, again, yen weakness for reasons I don't understand, and euro strength for reasons I also don't understand. So this one got that double whammy and did head all the way up almost to that outer trend line, and that is a very significant trend line since it comes from the weekly, that descending one. So I would be very, very eager to catch this one on the turnaround, because we're going to have about a 400 pip opportunity to trade it back to the prior low. So this one is also very top of the deck, with the advantage that it's not susceptible too much to the Brexit scenarios. Obviously, the euro is affected by Brexit, but not as much as the pound. So euro JPY is going to be a great pair to keep an eye on for the eventual turnaround. Euro. Same thing here. We have catch from this chart because the euro was getting stronger quicker. So all in all, it didn't move a whole lot. You can see that two strong or two strengthening currencies, I should say, made this one move in both directions. Even on Thursday, it went up, then it went all the way back down. Then Friday, it went up back to the top of Thursday's candle, or to the top of the wick. It is halfway through the Ichimoku cloud. This is one where I don't think the euro is going to have the strength of the CAD, the weakness to continue moving it up. So I would be looking for a turnaround on this one as well, all the way back down to the 144, the bottommost level of support, giving us an opportunity for about 250 pips. So also keep an eye on this one. The pound had a brilliant 2-week run, and now as the market opened, it is starting to retrace back down, but very slowly. So we'll have to see what the week brings. But another great opportunity if the scenarios turn dire to trade this one down all the way to the to the 126. And indeed, this is our second long-term trade that we have open. We have pound dollar and pound JPY, if I'm not mistaken. So we're trading both of these down. Weakness again for reasons I don't fully understand, and the Aussie won that fight. It's gone back up to a prior level of resistance, now support since it did cross it, but all in all, it's not moving up or down with any sort of decisiveness. So I would be looking here for a turnaround as well. Whatever point in time yen strength comes back, and try to trade it down for, I'm going to say, about 350 pips or so to that bottom level of support at the 70.75. Euro high, we have a level of resistance at the top. This was one of our losing trades on, I think, the long-term account. We had two losing trades, pound CAD and Euro New Zealand. So this one did take us out at our stop loss and has now turned around. It is still traveling inside a diagonal up. We'll have to take that into account. But again, I'd be waiting for that bottom trend line, this one here, to break. And if it does do a break of that trend line at any point, I am going to go short. I would not go long on this pair for any reason at all, as I just don't think the euro is going to gain that much strength for no reason at all. Far likelier that the Kiwi is going to come back at some point, or the euro is going to weaken and is going to have these levels of resistance. Support, I'm sorry. Pound Canadian, as with all the other pound pairs, up, 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 and away until now that they are starting to retrace. This one becomes a prime contender since we do know that overall we have Canadian strength. Of course, we've got to wait for whatever effect the election tomorrow is going to have on the CAD. So I'm looking for a pound CAD trade unless I see it moving very swiftly. I may put a pending order somewhere to catch it if it drops. But I would expect this one to head towards the bottom at some point. And last but not least, with the pound Swiss, same thing. Already happened. So we did see it crest on Thursday. Then it dropped very significantly. So it went all the way down to Wednesday's candle, then popped up a small bullish candle for the Friday. So we already see weakness on the pound Swiss, and probably I haven't looked at the chart for this one since the market opened, but I wouldn't be surprised if this one is moving quicker than the others since it was already poised to do so. I'll be looking at all the pound pairs for opportunities as the week begins, besides the fact that we already have a couple of trades open. So stay tuned for that. Our progress, of course, the UK is going to be top of the deck after 2 or 3 weeks, I forget, of pound optimism. A key vote this weekend failed to pass Boris Johnson's new Brexit deal. We've covered that. We discussed it. There's going to be a new vote on Tuesday. The EU has not responded, at least not as of the last time I checked, as to whether they're going to allow an extension or for how long. Indeed, they may not give an answer this week. The euro may wait till the European Union might wait till closer to the end of the month before giving a formal answer. and maybe have an extraordinary session, sort of like an emergency session, not this week, but next week, to address that and have a full vote. And remember that if even one member nation in the EU says no, then the answer is no. All nations have a veto power on these sort of things. So there has to be unanimity. All of them have to say yes for the extension to happen. USD pairs, the USD is still shaky, very shaky in the short term. We've seen that dollar weakness and with heightened concerns for the long term. Now, normally I would say short the dollar, let's go short, because logic would indicate that the dollar is going to be losing territory. But logic has been indicating that for more than a year and it hasn't happened. So I'm not going to be jumping in without seeing some confirmation that a move is starting. So stay tuned on the dollar, but try not to go in half cocked. Canada. The Canadian dollar is finally showing a backbone, and with a general election happening tomorrow, it may even show more of one. So we'll have to, if the Conservatives come back into power, and believe me, the race right now is too close to call. There's a very good chance that that either party could win tomorrow, and an even bigger chance that whoever wins will not have a majority in their version of parliament, which means that whichever party wins is going to have to make some sort of alliance with one of the smaller parties in order to have a majority and have a government. Same thing that happened to Theresa May when she called for general elections in the UK. She won, but by too slim a margin, lost her majority, and had to make an alliance with the DUP, the Irish Democratic Unity Party. That's what DUP stands for, Democratic Unity Party. So without the DUP, they would not have had a majority, and by their rules, they could not have started a government. They would have been thrown into, I guess, another election. So these alliances are key. The wonks that have been analyzing the Canadian election say that whoever wins is not going to have a majority. They're going to have to look for alliances. If Trudeau wins, he's going to be approaching the Green Party. If the Conservatives win, I have no idea who they're going to be approaching, but either party is probably going to have to make some deals in order to form a government. But if the Conservatives win, that is going to be seen as more business friendly, just common sense. I'm not saying that liberals are bad or anything silly like that. I'm just saying that the business people prefer conservative governments. And if the Conservatives win, that is probably going to bolster the Canadian dollar a bit more. If Trudeau wins a re-election, it's not really going to move the Canadian much in either direction. I mean, he is the party in power right now, so that would be a no change, or at least that's how I'm reading the situation. Of course, reality in the market will tell us what they really think by Tuesday. The button I didn't want to hit. The Japanese pairs, the yen, as I've mentioned multiple times throughout this session, is weakening for no obvious reason, and I am expecting a reversal at some point, but it will be in its own time. I can't tell you whether it's going to happen in 10 minutes or in 10 months or any time in between, but definitely be on the lookout for yen strength at some point to come back and be ready to trade that. And same thing applies to the euro pairs, except the opposite is showing strength for no good reason. And I am also expecting a reversal at some point here. Again, no clue as to when, but be on the lookout for that. And that is the end of my analysis of just to remind people that trading is boring until it's exciting. Unless you're doing things terribly wrong. And by that, I mean, if you're really trading high risk, if you're more betting or gambling than trading, then, you know, you're going to have some excitement in the market, but it's going to be bad excitement. Trading should be as exciting as watching paint dry most of the time. And every now and then it gets really exciting when things happen and, you know, 200, 300 pip moves or a fundamental makes a currency crash. And we get those rare shots of adrenaline, but You should not get used to that. The rare times when it gets exciting, you have to hold on to your hat. And yes, it's fun when you make a bundle. Obviously, if you have proper risk control, you're not going to lose a bundle, even if the trades go against you. But don't look for excitement in the market. Try to make it as boring as possible. You want to have measured risk, slow gains, and the odd quantum leap. When you're limiting your losses but not limiting your gains, every now and then you're going to have that brilliant 10% plus week, and you're going to have more of those than their opposites. And if trading is where you're getting your daily adrenaline fix, that's not good. I would suggest you take a step back and try to fix that. You shouldn't be getting excitement out of the market. That's not what it's for. It's not going to end well. So trust me, boring is great, at least when it comes to the market. And that's it for me today. Tonight, and you have any comments or questions? Okay, then we will be back tomorrow for our regular 8 p.m. session, and I will be sending a recording of this session out very shortly, as well as a brief summary. Thank you very much, and have a rest of a great weekend.